Broad-based recovery, right, stronger than expected. What happens 2 years from now?
Well, I think that's really the important question. I mean, there's one of the issues is that the Federal Reserve is on a path to normalization. That's the appropriate thing for them to do. But the part of that path involves some getting risk back into the financial markets, getting it priced right. That's going to be a little bit of a bumpy ride. And I think it's very important to think about what will the real investor do when faced with some choppy waters in the financial markets. So it's this interplay between financial market volatility and real investor choices to engage in the real investment that's necessary to keep this economy, the global economy, on track.
But Catherine, are you expecting a lot more volatility in the markets, and where would it come from? Is it monetary policy? Yeah. So is it a kind of like a vicious circle?
Well, so, monetary policy has to be on a normalization path so that there's room to maneuver in 2020 when U.S. fiscal stimulus runs off. So we have to have rate hikes. Is it 3? Is it 4? We have 3 and 3 in the Citi forecast. That seems like a reasonable number. That is going to have to be done in order to get risk pricing back into the market. There's right now no credit risk spread. There's no equity risk. Equity risk premium is too high. The dollar is disconnected from interest rates. And so in order to get us back to a normal financial market with risk priced in, you've got to make money a little bit more expensive.
Dr. Mann, every conversation here touches on your storied career and brings it over to the president, from Brandeis to OECD, and now at Citigroup. Your classic, is the trade deficit sustainable? If you were to have a cup of coffee 4 blocks away at the White House today, what would you tell President Trump about if the trade deficit he fears is sustainable?
Well, of course, the trade deficit he'd like to see is a smaller one, but the policies that are currently being undertaken, which is the large stimulus, are going to move in the other direction. So, stimulus encourages consumption and encourages investment. That's kind of what it's designed to do. Timing in the cycle is perhaps a little odd, but the end result of that is going to be a larger fiscal deficit. And so, is it sustainable? Well, the deficit right now is a lot smaller than when I wrote that book.
I've got the 3 books here, folks, of the IMF. I'm just going to put them up here quickly. This is the blue book, the green book. I got the brown book down here. We'll really focus on fiscal in the 6th hour. The answer is, in 3 years, are we going to be talking twin deficit in this green book? I mean, that's really front and center.
Well, I mean, you're going to have a fiscal deficit is going to be larger. So is the trade deficit. The question is, does that call into question sustainability? I would say the sustainability question is not on the external side. The sustainability question is on the internal side, the fiscal side, and that's where the problems are going to lie.
Right. So how can you? Is anyone going to try and mitigate the problems?
Well, I think there are differences of views about how much the denominator is going to move, right? That's the GDP. Some people think that the stimulus package is going to have a very large effect on the denominator, the potential rate of growth of the U.S. economy, which, of course, is the means by which you pay off the obligations that you've undertaken, which is the numerator, the fiscal. And then there are other people who see this as a GDP growth that is going to be short-term. It's going to be short-lived, the sugar high, and that as the fiscal stimulus runs off in 2020, you're not going to have the sustained increase in economic growth, the potential growth that will make good on the obligations. And that's where we run into sustainability problems. That's where the market sort of starts to worry.
But, Catherine, what are the chances of a recession in the next 3 to 4 years?
We don't have any recession included in our projections. We're not even close. However, what we do have is a big delta on growth between 19 and 20, going from 2.8 to 1.8. And for a lot of people, that's going to feel like a recession.
I don't know if you ran into on 16th Avenue Dr. Navarro. Maybe the two of you had a cup of coffee.
We will on Saturday afternoon.
You are? Okay, on Saturday afternoon. Yes. This is a Surveillance Break exclusive with Dr. Mann. You're going to meet with Dr. Navarro. How will you explain to him that this is not about China is evil empire? I mean, you own the phrase dysfunction within international economics with a major hat tip to Stephen Roach of Yale is well. Catherine Mann, how do you explain to Dr. Navarro, to Secretary Ross, and even to the free trader Lawrence Kudlow, stop worrying, just boost exports? How do you explain that?
Well, I think there's some question as to whether or not people's most concern among that crowd is about promoting exports or protecting against imports. And I think there's some differences in views on, which one of those is a better way to reduce a deficit. I think we're all worried that the approach that will be taken is to reduce imports.